I hope you're enjoying the learning experience with us. Please download our Scholars Learning app and enjoy. In this video, we will be studying about the sources of shift in supply. In the previous video, we studied about the sources of shift in demand. In this video, we will be studying about the supply. One is your increase in supply. And decrease in supply. So number one we have is fall in prices of inputs. See, if the prices of your inputs have reduced, so what will happen? The cost of production will reduce. Ultimately, the producer will be able to earn higher profits. And if the input prices are reduced and higher profit is earned, so a producer is willing to sell more. So this increases the supply. The second is use of advanced technology. Use of advanced technology. Third one we have is fall in price of other goods. See, if the price of your substitute falls down, the price of your product is more than the substitute one, you're earning more profit on that. So as a producer, you will wish to sell more or increase your supply. Fourth one we have is lowering of tax on production. See, if your taxes are reduced on production, what will happen? Again, the cost of production will be reduced, ultimately increasing the profit of a producer. So lowering of tax on production is the other factor that affects the increase in supply. The fifth one is rise in the number of firms. If your firms in the industry increases, then this will increase the supply. In this, let's see the factors that affects the decrease in supply. Number one is your rise in the price of inputs. If your price of inputs increases, what happens? Your cost of production increases and the selling price of your product remains same. So what will happen? A producer is earning lower profit than what he was earning before, so he will decrease the supply. Rise in prices of other goods. See, if the price of the other goods have increased, which means the other goods, the substitute is making more profit comparatively what you are making. So what you will do, you will hold your supply until the price of your product increases in the market. So rise in the price of the other good leads to decrease in supply. Raising tax on production. If the tax on the production increases, what will happen? Again, the cost of production will increase and you will be making lower profits, so you will decrease the supply. Fall in the number of firms. If the number of firms reduces in an industry, what will happen? It will ultimately, there will be less production of goods. If the number of firms have fallen down in the industry, so there will be less supply to the particular commodity.